All right, let me shut down the music and we'll get started here. Yeah, there might not be too many people on. Good morning. Good morning, everybody. It's Sunday, plus it's early morning, depending on where you're at. It might be late in the day, it might be afternoon, it might be evening. And it's recorded, so I don't know how many people will be on. So how many of you guys have eaten breakfast by a timer? So I had that timer runs and I had 3 minutes to down my breakfast. So, all right. Thanks for letting me know my mic's working. All right. So today I'm going to go over I don't know, guys, back in the day, these signals were set up and it was called Power Trader. That's just what we called it. It's a power course, and the power course is that training that goes over, goes over like everything. So, it goes over pretty much support and resistance, our trend lines, it goes over all that stuff. That's the power course. That's the base that I learned to trade on. Okay. That's how I learned to trade. Those are fundamentals, or the fundamental tools I think everybody needs to learn how to trade. You need to know what support and resistance is. You need to know what trends are, whether it be up, down, or sideways. You need to know, like we look at our 4-hour zones that we draw, which is basically swing highs or swing lows on a 4-hour time frame. Why do we do that? Well, we do that to put the odds in our favor. We're trying to trade with the market moves, the bigger market moves. So that's the base I think everybody should know. That's what I learned. You guys know that I actually paid $20,000 for the course I took. Quite pricey, put $5,000 down, started a month later, had to put another 5 down, and so on till it was done. And I was also live trading with them too. as I learned. So it was a little different scenario. I was sitting in a seat at a computer next to the hedge fund manager. So I was very lucky to find those guys, find the owner. I was very, lucky. I consider that they actually were willing to teach me. I wasn't looking to go on board to work. They were in Boca Raton. I was in Naples, wasn't looking to move. So I consider myself very lucky to have found that. And basically, that's the basis I think everybody should need. You need some kind of grasp on market moves. Okay. And other than that, then this is our 3-minute signal system. Okay. So I decided to change things up a bit on it because the way I had it back in the day, it was okay. The way it was set up, the way it looked on the chart. However, I felt I can make it a little easier to understand. So I really appreciate the guys in the premium that have, guys and gals in the premium that have helped me. And I know the signals are going out a little different, but as you guys have taken these the last 2 weeks, what I don't think you guys realize is it gave me input. As I'm sending the signals out and looking at the charts at what I see, I realized it might not be easy to understand the way I had them set up. Okay. I basically had all the signals on the bottom of the chart. And I think it could have got confusing very fast. And I had posted a couple, there was a picture I accidentally posted out there the other day, but that was with the way they were. So what I decided to do was try and make them a little easier to understand. Okay. So we'll get right into it. I've got it set up at like a slideshow here. Let me mute my system sounds here and set this up, and we will get started. If you have questions, go ahead and ask them. I don't know if I'll be able to see the, yeah, I appreciate that. Yeah, I don't know. I live for trading. My wife knows. She hears enough of it. She hears too much of it. We head to bed at night and I start talking and she just, I think she half listens because she knows. She's heard it enough. She could probably trade in her sleep if she wanted to. All right, let me get a few things set up here. I'm back on that. And we will get started. All right, so I've got this in kind of a slideshow format. And oh, that's the end. We don't want the end. Who wants to see the end first? Sorry, that's the end. That's your sneak peek. Wrong slide, right? That was it. Just a teaser. Sorry, guys. All right, now let's start. Let's start at the beginning. Okay, so again, these are signals that we're taking on the smaller time frame, the 3-minute chart for entry. We're day traders. We want to make our our daily bread, our money to live on, our daily goal that we shoot for, whatever we need. If you're a trader, it makes $4,000 a month at your job, then in order to substitute that, you need to make $4,000 trading. If that's what you're looking to do, change careers, because trading is a career, it's a job, it's a daily tasks and job. So if that's what you're doing, is first you want to make that lateral move, well, then let's make what you were making at your job. So if it's $4,000 a month, then you're looking at basically $1,000 a week. And then, that's what you need to make trading. So we like to lock in money through the day. If the market gives you money, let's take it. All right. So I'm not going to go off track too much. So this should be short, maybe half an hour from now as we go. And I'm sorry, I'm still fighting a cold, so I will be drinking coffee while I'm doing this. All right, so the objective for this, what we're doing is, this is the lesson to show you how to trade the power signals indicator. I've tried to set this up as easy as I can. I know the way you're going to see it today is a lot different than what I was doing back in the day and the traders that were with me back then were doing. So it's taken some time to get it all switched over to TradingView from MetaTrader 4. And guys, it's not same. Like some of this is coded in TradingView version 4, and I have to convert it over to 6, and it has to be done manually. Some of it can be done automatically, some of it not. So I'm still working on some of that. That's why I said it's going to be the end of the year. So what we're going to go over is how to enter trades, how to manage trades, when to exit the trades. Those are the 3 things you need, right? This is your trade management. It's great to find an entry, but if you don't know how to manage your trade and don't know when to exit your trade, you could fall apart, right? There's rules that we set up. I'm not going to go over these on the chart. We'll go over them in the slides here. You should always, I will cover this, always look out before we take any trades. We look at the 4-hour time frame. We'll refresh in our 4-hour zones, trend lines, support resistance levels, and also the 1 hour. Okay. You should know your trading session. Sorry, the mouse isn't big on these slides. I don't know how to fix that yet, because on my computer, it's absolutely huge. So right now I'm reading some of this. You should also, define your trading session. Now, for the ones in the premium, they decided to go 7 a.m. It's kind of a group decision to start at 7 a.m. Eastern and trade till noon. Okay. And no trades afternoon. We don't take anything afternoon. And between 11 and 12, it's solely at your discretion if you want to take those, because the markets sometimes start to slow down before noon. Why noon? Well, 12 p.m. Eastern is when the overseas market is going home for the day. So you got all your hedge fund managers and bank traders, and you got that market shutting down. So we don't expect a lot of volume afternoon because you only have the U.S. market, the New York session on board. Okay, that's why we picked noon. If you trade between 11 and noon, that's up to you. There's really the first 3 hours in the market, which is 8 to 11, are the best of the U.S. session. But we decided to start out at 7 because some people are getting in a little earlier. Once you do that, you also need to check your economic calendar. Some people forget to check that. They'll start trading, and then all of a sudden something happens. So there's, along with that, I should probably add, so 3 things you want to be aware of that could really affect your trades fast is 1, economic calendar. So those news releases, that's 1. 8:30 a.m. Eastern. Okay. The Forex market starts at 8, but news for the Forex market comes out at 8:30 a.m. Eastern. So things could start moving rapidly. And then the other is 9:30 a.m. Eastern. Those are the 3 things: economic calendar, 8:30 a.m. Eastern, 9:30 a.m. Eastern. 9:30 a.m. Eastern is when the U.S. stock market opens. If you're trading any of the indices like, S&P, NASDAQ, Russell, then, you need to be aware that they might start moving. It might get volatile. Okay. So those are things you should do to prep before you even, jump in a trade. You need to know what's going to happen during the morning while you're trading. To go in blindly is just not a good idea. Okay. So now we'll go over the buy and sell rules. This is pretty simple what we're going to do. I'm just going to go over the rules, and then you'll see it in the chart here after a bit. So 1, the first buy rule is when the 1 hour time frame is green at the start of the day. Now, this is totally optional, but you're going to see evidence. I'll show you. I'm showing you kind of both of why you might consider that. You're going to be able to see how long the 1 hour has been green beforehand, before that time, and what it's done before you get in the trade. So that is an option. Some people will take this, some people won't. If you consider that to be a little riskier, And it depends on how it's moved so far. If you consider that to be a little riskier, then what do we do? So what do we do on a riskier trade? We put on less contracts. So if you usually put on 10 on this, you may only want to put on 4, 5, or 6. You know, some people like putting on half. They'd put on 5. This is totally up to you if you want to do that. But again, you're going to see in some charts why you might consider it. So if the 1 hour stays green, what do we know? Well, the 1 hour stays green, we're in a bullish trend, right? And then if the 5 minute turns green, so if the 5 minutes red, it's turned red for a bit, or it might be red and just the 1 hour flips, the 15 doesn't yet. But the 15-minute turns green or turns back green, okay, then that's another entry. And the other time you would take a position long or buy is when the 1 hour is red and then it turns green. It's letting us know that 1 hour trend is turning. Okay. This is, and I've adjusted this to take out the 4 hour. The reason why is because everybody in here is day trading. Nobody's holding positions long term. So what's happened is if you don't stay and use the 1 hour as our trend direction, you're missing out. I know some people last week were waiting on the 4 hour to turn. Well, the 4 hour is going to turn at 6 o'clock, and then it's going to either at 10 o'clock a.m. Eastern, it's either going to stay the same color or it's going to turn colors. Okay. So there's less opportunities to get in with that. So I'll have an indicator that I have it on, but it's not quite ready. And it will be in the top corner of the chart that will tell you where the 4 hour is. Okay. And hopefully I can have the strength of the 4 hour on it as well. I don't believe it might be in one of the images. I'm not sure. But this is how we're taking the trade. So the sell rules, just the opposite. If the 1 hour time frame is red at the start of the day at that 7 a.m. Eastern, we're going to go ahead and take it. And again, that's optional. If you consider it riskier, what do? You go in with less contracts. Okay. If the 1 hour is red and the 15 minutes say is green, but goes red, it's syncing up with the 1 hour. The 15 minutes syncing up with the 1 hour. Both say short, we're going to short. And then, of course, if the 1 hour has been green, you know, we've been long the whole morning or whatever, and the 1 hour turns red, that's going to be your another signal to sell. So that's it. Those are your signals. Take a screenshot, write it down. I'm actually going to probably post this slideshow. Well, the video will be up for you guys. And I may post the slideshow out in the Discord where you can just pull it up and thumb through it as you'd like. Okay. We're going to use the modified position tool. Okay. So I'm going to show you how it's simple. And, you know, I did the modified position tool this week, showed a video on that of how to set it up. It's basically the Fibonacci retracement tool, but we've set it up to be a position tool because the position tool on TradingView is very, very limited. It only shows you one profit target. Set it at your stop and your entry. It projects a profit target. You drag it to whatever you want. If you'd like to know about other profit targets, you actually have to manually draw in lines. Okay. So here's how to apply the tool to the charts. It's pretty simple. So you need to find point A. So point A is going to be where you want your stop at. Now, I don't draw with the tool first. Get that? Just jot that down, whatever you want to do. If I see a signal, if we had a signal right here that boom, we get a signal that says to take it long, I'm jumping in. Okay. I'm going to jump in. If it says take it long right here, I'm jumping in and I'm putting my stop below the low. I'm doing that first. Take care of getting in first. Okay. Because what the worst thing that can happen is while you're messing around drawing the tool, what does it do? It's fine if it retraces, you're going to get in at a better price. But if it takes off, you're missing out. And then you're trying to jump on a moving train, right? So place the trade when the signal comes out. Signal comes out, put the trade on, it's going to be at price B, and then put your stop down at A. Okay. Once you've done that, that's when you take the tool. So wherever your stop is, point A, and wherever your entry is, point B, you're going to take the position tool and you're going to drag it. You're going to drop it on the chart and drop it at point A first. That's how that tool works. It looks for the low point or the high point if you're short. So the first point will be your stop. So set it on your stop, drag it up to your entry, and that's what it looks like. Again, you set it on A, drag it up to B, and that's what it looks like. And as you notice, we have several targets in here already. These are risk levels. What we've set this up, and there's a video on how to set that up, so I'm not going to go over it, but we've set it up to whatever this risk is right here. Doesn't matter. Whatever that, because your trades, your risk is going to be different each one. It just is. If you're going by the rules, nobody should be going with like a 10 tick stop or 20 tick stop every single time. Use the lows, okay, in this case, or a high. If you're going to short, you're going to use the high and go a few ticks back because sometimes those areas get tested. So whatever this spread is here, then that's where each of these levels, okay, level 1 is actually your entry price. Level 2 is here. That's a 1-to-1. So level 2 is your 1-to-1 level, okay? Level 3 is actually 2-to-1 risk. So it's just one down. So if you're looking and you see it's up here at 5, well, that's a 4-to-1 risk. There's no way to relabel those. Those are labeled automatically. So unfortunately, when you drag it from your stop to your entry is labeled 1. That's just the way it is. There's no way for us to change that. So just know that as you're looking at someone's charts or as you're trading, if it hits 4, you're actually at 3-to-1 risk reward ratio. Okay. I've also added a half point in here, and we're going to go into why. So I've added a half point in there. All right. So 1, again, this not only helps you pinpoint your targets, where they're at, but it'll also help you with closing partials as well as adjusting your stop loss. So I think it's great using it this way. I went ahead and used it last couple of days, stuck to the rules on it just to see how you guys might be seeing that. I think it's great in the way it's set up and as far as using it. And it will actually help you to manage your trade rather than trying to guess at when to move your stop. Okay. So the first time you're going to move your stop is when it hits right here. When it hits the level 2, which is again 1 time your risk. So you're at 1-to-1. So when it comes up and hits that point, what you're going to do is you're going to move your stop halfway to break even. That's why that halfway mark there is the 0.5. Okay. What you've just done is you've cut your risk in half. So let's say you were risking it don't $100, $200, $300, $500 or $1,000. I mean, it depends on how many contracts you're trading, right? And how far that distance is. So whatever it may be, you're risking $100 on this trade. Well, again, when it moves to 1-to-1, you're going to move your stop to halfway. You just cut your risk in half. This is part of trade management, right? So then when it comes up and hits level 2, what do you think we're going to do? We're going to move our stop to break even. Now we're protected. Now we can relax. I saw someone mention that in the Discord the other day. I don't know. I think it might have been Max on his recap. Was it Max? Was that you? I don't know. I think a couple people used it the last couple days. And again, you can totally relax. Don't panic when you're in profit. I've seen people, panic when they're in a loss. And that's one thing. But I've also seen people panic when they're in profit because they don't know what to do or they can't relax or, you don't know when to move your stop. So set up rules like this. And I don't care if you adapt these rules or change them. Some people may not move their stop to the halfway point, may give it that extra room. That's going to depend on you, the trader, right? But you move your stop to break even. So at this point, you can relax, okay? Because you're protected from taking any loss on this trade. Now you're in a risk-free trade, right? So now it comes up and hits profit level 3. This is 3 times your risk level. Remember, number 4 is actually 3 times your risk. It's one number down. So it comes up and hits profit level 3. Guess what we're going to do with their stop? We're going to move it up a level. Now, this is where it's up to you, the trader. Might be a little different between one trader to another. You can move it up one level and give it that extra room, or you can move it aggressive. Until it gets to the 3-time profit, I wouldn't consider being aggressive with the trailing stop. I would keep it, and just like I said, when it moves to profit level 2, I'm moving to break even. Give it that extra room, especially if it's a steep move, then it might pull back. But ultimately, when it hits level 3, you've got 2 options to move your stop. So everybody's going to be a little different. You're going to see profit on the table. Some are going to pull it here, 2 levels back, and say, okay, I'm fine. I'm going to give it room. Hopefully it trends the rest of the day, something like that. And some will go aggressive, a little tighter stop. That's totally up to you. So there's 2 ways that you can manage that once it gets rolling, right? And I'm not clicking through, but once it hits 5, guess what you do? If you're trailing here, 1 level back, when it gets to level 5, you're going to move it up a level. If you're trailing 2 levels back, once this gets to 5, you're going to move it up to that level. Okay? That's it. That's how you're going to manage the trade. Now, you're also going to know where 4-hour zones are, 1-hour zones are, right? Support and resistance on a 4-hour chart, because that's where the market makers play. They're playing off larger time frames, and they're trading price. They're not drawing trend lines. They're trading off price. So we need to know where those 4-hour and daily time frames are, or prices are, right? That's why we draw those other things on the larger time frame. So we're going to look at the signals on the charts. All right, I'm going to show you how they look on the charts, and then we're going to go over kind of, and when we get to the charting, the screenshots, I'll show you, and you'll see where the trades were taken. You'll be able to see why they were taken. Again, I've tried to make this really less confusing than what it was, because I think if I would have released it the way it was, the way I've been trading it, it might have been confusing. So I think you guys are going to like this a little better. Okay. So first is the 1-hour time frame. That's our intermediate trend direction. That's what we're trading as day traders. We want to get in, get our profit for the day, get out. We might hold the trade. We're not scalpers. You know, we don't intend to be scalpers, right? Now, could a trade end up be a scalp trade? Sure. If the market turns and we're only in it for, a few minutes or something, but normally a scalp, you're in and you're out in a few minutes. That's not us. We're day traders. All right. We are trading off of these higher time frames for a reason. We want to leave runners on our trades. We want to put on 10 lots, close out 8 or 6, and leave 2 to 4 runners in case it goes, that day and trends for the day, right? Well, this is what it looks like on the chart. It's at the bottom of the chart. That's it. It has green lines and red lines, and I'm sure you can guess that when it's green on the bottom, we're only looking for buy signals. We're only looking to get in long. We don't want to trade against that, 1-hour trend, right? We only want to go long. When it switches to red, what is that? Well, I just mentioned earlier at the start that when the 1-hour is green and switches to red, that is one of our signals to sell. That was the bottom signal, the last one that you will possibly see, because you don't see these as often. We don't want the 1 hour flipping back and forth, right? The 1 hour, we want to see it green all morning or red all morning. We do not want it flipping back and forth. It's okay if it flips during the session, our trading session, because we're going to take that as a sell signal. Over here, when it's red, we're only going to do what? We're only going to sell. So you're only buying if it's green. You're only selling if it's red. Then you're going to get your buy signals. This is our 15-minute time frame. Okay. So this is the 15-minute time frame coming in sync with the 1 hour syncing up. So we're green over here, and we see the 15-minute come up. This is what it looks like on the chart. It's at the bottom of the chart under the candles, and you'll see it come up here. So let's say the 1 hour's green, and you see this pop up. It was red. The triangles were red. They're going to be at the top of the chart. So you see this signal come up here that the 15-minute is green. We're going to buy because the 15-minute just synced up with the 1 hour. Synced up or resynced up, right? So we're going to take a buy. You're going to hold. That's the 15-minute staying green. You're going to hold. If it turns red down here, if these turn red, they'll pop up at the top. That means we're in a retracement period. So if the 1 hour is green and the top turns red, and I'll show you on a chart, that means it's retracing, pulling back. You could close your position off that and look for a re-entry, or you just ride the retracement. And then we get to the sell signals. Again, they're off the 15-minute time frame, and red is for sell signals. That is at the top of the chart. Okay. So again, I've tried to make it a little easier. What I've been trading is 3 of these right here at the bottom of the chart. And it was monitoring different time frames. So I didn't have the arrows. It just had the lines. It had a line above it that was our 15-minute. And when they come out of sync, I just knew, yes, it's out of sync. So I've tried to make this a lot easier for you guys. Okay. So here's our first example. And I'm going to point out right off the bat that, one of the buy and sell rules is to, at 7 a.m., when you jump on board to trade, taking the trade automatically based off where the signals are. That's the first buy or sell rule. So if you would not have taken this, that's why I want to show you guys this, and you'll see a loss on one of them. If you would not have taken this short at 7 a.m. and you're waiting around for signals, guess what you missed? I mean, if you look at this, here's noon. I mean, we finally get a little green down here before noon, which, what does that mean? Well, the 1 hour is our trend direction, right? So at 7 a.m., the 1 hour is red. We're looking for sell opportunities only. We're going to sell. Every time we hit a sell signal up here, we're going to sell, right? That's it. At noon, the 1 hour is still red. It didn't go green till back here at what, 2 o'clock? Yeah, 2 o'clock, 2 p.m. So if you would not have taken this sell signal, you missed the whole move. You just missed it. Now, you're scrambling to get in. And this is what we're trying not to do, right? We're trying not to. Now, you could come, as it comes down here, you could see it forming the lows. You could draw a support resistance line there and say, if that breaks and tests, I'm in. Which, if you had a vertical line or a horizontal line off this right here point, extended, you'll see it broke it, tested it. You can get in on that red candle. But that's an entry off our classic rules. Okay. That's what we've learned. What some of you guys have learned over the last few months is to trade on those breaks and tests of those, areas. And that's fine. If you just take the signal, you'd be in a little earlier. So overall, nice bearish move on this, right? There was another, see how it goes green. So it went green down here. That means we're retracing. means it's going to pull back. We never know how far. Okay. So when the 15-minute down here, because remember these arrows are 15-minute. So when the 15-minute goes green, you can, if you want to get aggressive with your trading, you could close out your short and then get back in if you get another signal short, which you get here. Okay. So that's why when you look at how people are trading this, everything's a little different. One person will say, well, when I see that 15-minute go for retracement, I'm going to bail on my short. And then when I see it signal again, I'll get back in short. And that's fine if that's the way you want to manage that trade. I like staying in my trade till the 1 hour turns green, which is over here. Okay. So I'm going to point out this signal right here. So this signal right here, this is noon. So I've got my session tools set up and I'm using 2 of the sessions. If you notice, this is the New York session. This was the Sydney session, this section, the purple. So what I've done is I've overlapped them. They both start at 1200. Okay. And then this first one, the blue one, stops at noon. And the second one, the old Sydney session, I've adapted it to start at the same time. So they overlap here. So we don't get funky looking boxes. And then it stops at the end of the session. And this is basically just before 5 p.m. Eastern. That's because I know some of you guys are trading on prop firms. So that's how mine's set up, just to stop at the end of the trade day. Okay. So the second half marked out. Why did I do that? Because I got tired of drawing vertical lines. I would draw a vertical line at the start of the day. I draw a vertical line at noon. I draw a vertical line at the end of the day. Now I don't have to do that. That's why that's set up that way. Okay. Again, trying to make things a little easier as you trade, less work to do. All right. So again, with that signaling close to noon, are you going to take your trade? It's awful close, to noon. Now that sell signal panned out and it did move down. I didn't measure it to see if, it had enough room to close partials, right? Or not. So you have to decide, are you taking things between 11 and noon? Do you need to? As you look at this chart and you got in on this big drop, do you need to take that little, that trade there? Some reasons why you wouldn't want to take it is, one, you've already got a lot of profit, right? The other is it's close to noon. It's a riskier trade close to noon. So just be aware, if you throw on some extra contracts, that it is a little riskier adding that because you're right around noon. People are, again, closing down overseas, going to lunch here in the U.S. And the market tends to do what after lunch? Tends to go flat. Sometimes we'll get moves, little trending moves here and there. Sometimes it goes stagnant and flat. So again, do you need to take it? Some people will, some won't. As far as closing our runners, what we do is, of course, place the trade with 10 lots or 5 or 4, whatever. As it moves down, you're going to close profit, partial. You're going to close part of your trade out. You don't want to close it all. And that's a good example why. Because we have runners on. So, but you want to close partial. So say you closed out 8 of the 10 here and moved your stop to break even. So you entered here. It comes down here. You close out 8. And how can we close out 8 without us having to watch the chart, stare at it, and be quick to place the trade? Put a limit order, right? And with 10, you're going to put a limit order here, a buy limit. So if you're in short, in order to close out contracts on this platform, you need to go in and say you're short 10, you would need to close out 8. You would need to put in a manually, you'd put in a buy order with 8 contracts, and that would market order, and that would close out 8. or you can put a buy limit. Has to be the opposite. So if you sold here and you're in a sell position, you have to put on a buy limit of 8. And what that'll do is when it comes and hits that price point, wherever you set it, could have been right here, it's going to automatically force you to take profit. Why do I like that? The reason I like that, I've seen so many traders sit there and go, well, I was in profit. I've been through this a lot. They get in with 10, they're in profit and they're up X amount and they do not want to close. They have a fear of closing, fear of taking profit. That's all I can say. They got a fear of taking profit when it's given to them, right? They're not forcing themselves to take the trade. So if you have a problem, you get in short on these and you say to yourself, if it hits this level, I'm closing out 8. You know, you have a price point in mind. It could be $300. So you're up $300 for the day, $300 every day. That's what you're looking for. If you set a goal for your profit and you don't take it, are you exercising good trade management? No, you're not. Not at all. Because what a lot of people do go, well, I'm up 300. I'm just going to leave it all on. And this day it works out, but every day it won't, right? So you have to force yourself to take profit. Yeah, the arrows in a row, that's just, it comes up every 3 minutes. I mean, we're looking at a 3-minute chart. So there's just not one arrow at the beginning. It's letting you know that the 15-minute has stayed red that whole time. So that's why there are so many red arrows. They're not each, I mean, you could sell it anytime you want. It's letting you know. Say you don't get in here to the market till 8 o'clock. Here's 8 o'clock, right? So say you get to the computer at 8 o'clock. What the 8 o'clock, you can see that 1 hour's red. We're looking for sells. You can go back and see that it like 6:30, 6:40, well, 6:45, whatever that is, that it just changed red here, you know, and it's 8 o'clock and you're here. It's so that you can see that it's 15 minutes still red, right? Because we're trading with those two time frames, the 1 hour and 15 minute. So you're going to get one that pops up on every 3-minute candle. That's just the way it works. So it's to let you know that the 15-minute is staying red that whole time. Okay. No, thanks for the question. Because other people might have been wondering too why there's so many and just not one arrow. That's why there's just not one arrow when it pops. It's letting you know that it's still in a bearish trend. Okay. So again, getting back to taking profit, if you cannot manually close those out because you're in profit and you're afraid of missing out on a huge move with your full 10 contracts on, if your trade management says you're supposed to close partial, well, then you close partial. Again, if you're having a problem doing it manually, if you have a problem taking profits and locking them in by closing partial, the only other thing you can do is move your stop. You can do it either way. You can close partial, leave, let's say you close 8, leave 2 on, and you can move your stop, you know, to like break even or a little better and break even. It's up to you guys. You don't have to close partial. You can manage the whole thing with your stop and use the profit target tool, right? So it's either or. Some of you guys are going to do that. Try and leave a full 10 on for days where it's trending. And I've got no problem with that. You're just going to leave full 10 on and you're just going to manage your stop according to the profit target tool. And that's fine. You know, some of those are going to pan out to be really, really large trades because you do have the full 10 contracts on. Okay. Some of them are going to pull back and go to break even. As long as you're fine with that, or a half loss, as long as you're fine with that half loss, the size it is, well, then that's fine. That's why I said everybody's going to be a little different on their trade management, on what they decide to do a little bit. So as far as closing trades, there's 4 different ways you can close trades. You can close at noon and be done. Done. Just noon, done. Walk away from the computer, I'm done. And you just be done with the whole thing every day at noon. So 7 a.m. to noon. That's it. You can close when the 15-minute goes green. Because what does that mean? The 15-minute changing means we're getting a retracement, right? If it's turned to the opposite color. So if we're red, we're shorting all day. We had a little retracement here. Not much, a 1. I mean, it retraced. These signal after it starts. So it started a little bit and then continued up a little bit. And then we had the signal, which right here, right about that candle right there, it signaled up top to go short. So that was another signal go short. So that trade actually works out too. If you got in, not closing at noon. I mean, closing at noon, you would have been up a little. Closing at 15-minute reversal, you've been up a little still. If you waited till the 1 hour turned, then you would have been down on the ones you added on your second trade. Okay. So, or you can close at end of day. So you can close at noon, just be done. Close when the 15-minute turns, or wait for the 1 hour to sync up to see. And at 2 p.m. it does sync up and it says, yep, we're bullish, and it turns and then it goes up more. Or you're closing at the end of day. Those are your 4 different exit strategies. And not one is right for everyone. And not one is right for every trade. So you just have to make the decision and go. So here's another one. This one actually switched over at 7 a.m. So right at 7 a.m., of course, we have a bullish move. You can see this large bullish move. So it's dragging the whole market with it. Every signals indicator out there is going bullish. Even the moving averages, if you have them on your chart, they would be crossing over during that move. So the whole market's switching over to bullish. Every single strategy trader out there is getting signals to go long, because all, like I said, their moving averages are crossing. Their MACDs, giving them signals to go long. Stochastic, RSI, all of them. And we just had, I didn't draw it. There was a downward move here that if we drew a trend line down it, guess what? Even trend line traders are taking the break of the trend line, right? They don't get a retest, but they get a break, strong break. So your buy signals are here. So the first buy signal, we would buy at 7 a.m. That's just it. We come to the market, sit down, boop, we're going to buy. Because that's where the signals are, right? It pulls back some, not much. Where would your stop be? Your stop should technically be below the low. So if that is a long stop, which it is, it's a huge stop, there's a couple things you can do. You can always, if you get a large candle like this, you can always try and use the bottom of the large candle. Give it some room to breathe, or this candle back here. That's going to shorten your risk, shorten your stop loss. The other option is, if you normally put 10 contracts on this trade, okay, well then if you're going to put your stop back here to give it extra room to breathe, then you're shortening your contracts, whatever that may be. If you normally put up $100 risk, like if you would have got in here and say it's $100 risk, well now you're putting on like a $400 risk. So what do we have to do? We have to cut our contracts by 4. So we have the same risk, right? So again, if we would get in down here and have $100 loss on 10 contracts, let's say, and I'm just throwing numbers out there, but if this is up here, we get in, it's 400, then we would have to just cut our contracts by 4. Okay, so only put on 2 or 3 contracts, right? So overall, then it goes up. We get a little retracement signal here. That's off this move down. Basically, it started moving, pulled its signals with it. So you get another signal go green here. I guess I should have drew a vertical line on that. It's somewhere in here. It's on one of these 3 candles. It's not on that one. I know that. because it normally signals on a drop. And I think it's that one, red one there. It might be that green one. But that's another signal to buy. So what would you have done? You would have thrown on some more contracts, right? Because over here, you would have pulled partial. You put on 10. It goes up to your first take profit level. Let's say you have a sell limit because we're buying. Put on a sell limit up wherever your first take profit is. Then you put on a sell limit to close out 8. Well, then you have 2 contracts on. Depending on how you manage your stop, you might have got stopped out up in here. If you're trailing your stop tight, 1 level back or 2 levels back, then you would have got stopped out on your runners up in here somewhere. Some of you might have even closed out 1. Okay. And I didn't show you that on the profit tool, but you can actually close, of course, every level it moves is an opportunity to close out part of your trade. So if you put on 10 contracts and close out 8, then when it moves up to the second take profit level, you can not only move your stop, but you can close out 1 of the contracts. So every level that it moves up along that profit tool, 2 things can happen. You can move your stop and you can pull off another contract or 2. Depends on how many you put on and how many you leave run. So anyways, we had another buy. That buy, would have, this is why we close partials, because when it goes up into here somewhere, you probably would have closed partial. You would have had a limit order on. That'd be a sell limit order. It would close off 8. You would have adjusted your stop to break even and probably got stopped out here on this wick, okay, on your runner. So do you miss out on much? Not much. I mean, it goes up here. And then the 15-minute turns red. So when the 15-minute turns red, if we're green down here, 1 hour's green, 15-minute turns red, what do we say? Retracing. It's pulling back. It's retracing. So we get that retracement, and then the 1 hour turns red. Syncs up with it. Well, what are we going to do? If the 1 hour's red, we're going to sell, 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 sell. That's all we're going to do. So that would be your sell signal right there. Now, this one does retrace back quite a bit on you. That's why we use previous highs, right? So it retraces and then moves on. You're closing out, partial would be in here somewhere probably. It depends on how aggressive you get with your, everybody's looking for a different dollar goal. So you would have closed partial, left the rest on, and now, you get a green signal, meaning it's retracing a bit, doesn't retrace much, goes up a little bit, and makes another drop. So let's touch on exits, because I'm trying to point out and zoom in on every little detail so that you guys can see the different options. For the trader that closes out at noon and you're happy to walk away and be done for a day, you close your trade at noon. Are you happy for the day? Yeah. You got 2 or 3 if you took this other trade, but you got at least 2 good trades, 2 good profitable trades, right? And you walk away happy. Never kick yourself for pulling profit. You can have a talk with yourself. That's why we journal, but you never kick yourself for pulling profit, right? That's our goal. That is our job. If we're here as day traders, it's my job. If I want a paycheck at the end of the month, it's my job to lock in profits. If I don't, I'm failing myself, right? So if you close at noon, you close at noon. Great trades. If you don't close at noon and you wait for the 15-minute to turn green, right? This one did, but it was before noon. So we're looking after noon. At noon, we either close out at noon, or when the 15-minute turns, or the 15-minute and the 1 hour goes green, and then end of day. Okay. I'm reading a comment here. Guys, it's up to you guys if you're entering late. I'm not So here's the thing. You have to decide on what session you're trading it. I was always in here at 8 o'clock, but now we're coming in at 7. So if we're coming in and catching signals from 7-Eleven, I want to be here at 7. So if that signals, I'm catching that one. And if it's already, that goes back to this picture here, where, you get in here, it could have very well pulled back. If you get in late, you get in late. If you get in late, like this one, so the trend changed here at 7. You're in, you see a big move up, you get another signal here. I'd call that late in the day. It's 9 a.m. It's around stock market open, getting ready to. I mean, that's later in the day. You're 1 hour in. So it just depends. If you could very well, that's when you're going to have to pay attention to the moves and the pullbacks, support and resistance levels. I would never enter in on one of these candles down here. It's aggressive. It's dropping. Say, we did over here. That's because the signal changed. That's because the 1 hour flipped. Once it's already flipped and it's in motion, you're kind of jumping on a moving train. It's a good question. Oh, yeah. You guys can put this on a 5-minute time frame. The question was asked, can you use it on the 5-minute time frame? You can, because the signals they're locked in. It doesn't use the chart time. These are not arrows coming off the 3-minute. So they are locked in on the 15. The arrows are. And then the bottom indicator is locked in on the 1 hour. So you cannot change them. So you could be on the 3-minute, 2-minute, 5-minute, 10-minute if you want, but that's awful close to 15. So again, you're either going to close at noon, close when the 15-minute changes, and then wait for the 1 hour. You're looking for the 1 hour to reverse, which it does not. Okay. Or you're closing at end of day. So the best option to close on this chart would have been what? Would have been closing at the 15-minute turn. Right? That would have been the best option to close on this particular trade. Closing out at end of day, right here, you would have made a little more profit over closing out at noon, not much. And if you waited for the 15-minute didn't turn. So if your strategy on closing trades is waiting for the 1 hour to reverse as it goes, right? 15-minute turns, and you don't do anything. You're waiting on the 1 hour turn green. It never turns green. So what do you have to do? You close at end of day. Okay, that's just the way it is. You never got the 1 hour turn. That's fine. You close at end of day. All trades are closed at the end of the day, no matter what. All right, so here's a choppier one. And notice we're on gold still. These are all on gold. All right. And again, this first part of the session tool marks noon, 7 a.m. to noon, and the second noon to the end of day. So when it comes to this second half of this tool, then after noon, we're just managing our trade. That's it. We're looking for a way to close our runners, and that's it. And if it were to trend one way, if it were to keep trending down short, we're going to move our stop, okay, off the position tool. So the 1 hour was green ahead of time, but at 7 a.m., there was a red signal up top. So that's your signal that it's what? It's retracing. 1 hour time frame, bullish. We're only looking to buy. This is green down below. We're only looking to buy. We get a red arrow. It's bearish on the 15-minute, which means it's pulling back. But we don't want to get in at the start of a pullback, right? So we're not jumping in on this one at 7. If you did, guess what you had to ride? You had to ride a deeper pullback. So we're not taking that one because it's red up here. But we know it's retracing, right? So at 7 a.m. we come in, we know, okay, Ooh, it's just starting its retracement. I'm not going to take that. If you did take it, you got a loss. Okay. Depending on where your stop is. Your stop should be below a low. So if you had your stop below like this low, you're stopped down. If you went to the actual swing low, then you would have still been in on this. So the first signal after that to go long would be here. Again, the 1 hour's green, we're only buying. We get a green arrow. Guess what we do? We buy. There's your entry. Your stop should be below the low. That's how you would draw to it. You would jump in. Again, signal hits, you're going to buy right away. Put your stop below the low. Take your position tool. Point A would be the stop. Click it there. Move, drag it up to your entry. And those are going to be your risk levels. 1 time risk, 2 times risk on up the chart, right? And then you're going to manage your trade. So that's the first signal. Choppy on pullbacks. So depending on how far you keep your stop back, you might actually have been taken out of any of that. Up here, 15-minute turns green or red, sorry. That means we're getting a pullback. We actually got a large, huge pullback. I think this was a news day. U.S. stock market opened up in here. Between 9 and 10, we have 9:30. So you actually had the U.S. stock market open at 9:30 a.m. Eastern, right? So it's a reason to what? Be aware that the market might start moving a lot more. U.S. stock market's coming on board. Okay. So that was a signal. It signaled on a pullback. So it dropped and then it pulled back and then signaled on that green candle there. Okay. That's when the 1 hour came on. So you take it short. Take it short. You would have closed partial as it dropped, moving your stop to, even if you moved to break even, guys, you would have been taken out on this, right? So as this moves and hits your profit levels, you're going to close partial, you're going to move your stops, and then you're going to have runners on. When it comes back here, here's your break even. That's your entry. You see, it would have taken everybody out, every one of us. It would have taken out. Unless you entered, because when you entered here, your stop should be above this high, right? So as it moved down, you're closing partials and move. If you're not trailing your stop and you're leaving where it was here, that's the only trader that stayed in. The only trader that stayed in was the one that left the stop above it. Never moved to stop, just closed partials. So if that's not you, if your risk tolerance doesn't allow you to leave your stop there and feel comfortable with the way you're trading, then you're going to trail your stop. You're going to you're going to get stopped out. We get another signal to go short. Okay. And it moves down. Probably over in here is your first take profit level. Okay. Because there's your entry. Your stop should be above there. That might only be a 1-to-1. I didn't measure these out. I'm just showing you the ins and outs. And then it pulls back and you get another signal. You get it green on the pullback. See how you actually get this first green? It's actually on this move down. When it's telling you it might retrace, right? Pull back. And some of you may choose that as closing out your trade and look for another entry. It just depends. Everybody's a little different. It signals here. My only caution would be on this one. It signals again to go short. What's my caution on this one? It's at a good price point, right? It's telling you to go short on a peak on the high. That's getting you at the best price. That trade got in at the best price it could, but it's close to noon. So are you taking that signal? Some of you are going to say yes, because look how much it dropped. Okay, that's using hindsight. You have to decide now before you start trading this week, are you going to take the signals that are that close to noon? Or are you going to stop at 11? If you said, no, we're stopping at noon, we're stopped taking new trades at noon, well, then you would have taken that. Your stop would have been above this high. It's a nice tight stop. Enter, tight stop, that definitely goes down to past a 2 to 1. It looks like 3 or 4 to 1. So it goes to this probably about 4 to 1. And you're doing what? If you're trailing your stop one back, your stop would be at a 3 to 1. And you're getting stopped out here on your runners 3 to 1. Okay. Depends on where your stop is. If it's 2 back, you'd get stopped out at, 2 to 1. So what you get stopped out at is up to you. Or you hit that noon candle, which is this one, right? Nope, it's that green one right here. It's this green one. You would have closed out there. That's noon. So it would not have hit your trailing stop if you close at noon. You would have closed out, been in profit on that last one too. Other traders are going to choose the 15-minute turning green, which was here. That's your second exit strategy. Close on a 15-minute reversal, which since we're in a sell mode because it's red, you would close out. And it's up in here somewhere. Or you wait for the 15-minute to turn, which is here. And it's up in here somewhere. Even that last trade would have been a little better than break even. Or you wait till end of day. End of day's over here. So as you look at all 4 ways to close your trade, there's actually a couple that were decent. Enter, and I'm looking at not the whole trade, all of them. All 3 of these were profitable, but specifically this one, entering there. And really the others as well. If you closed out here at noon and look at end of day over there, it's about the same price level, end of day. About the same price point. So those 2 traders would lock in about the same amount on all the runners, right? Trader closing at 15-minute would have gave some back on the whole trade. Trader waiting for the 1 hour would give back a little bit more. Not much. About the same, actually. Because it's over in here. Yeah, about the same. So the 15-minute, person that closed at 15-minute, person that closed at 1 hour changes. Those 2 are making about the same profit. How many runners do you have on? These are 3 separate trades. You're putting on 10, closing 8. You got 2 on. Putting on 10, closing 8. You got 2 on. Putting on 10, closing 8. You got 2 on. You have 6 runners. It just doesn't go anywhere. Is it supposed to go anywhere after noon? You have 1 market shutting down at noon. That's overseas. And you have 1 market going to lunch. Let's just say that after they get back from lunch, they're lazy. Their tummies are full and they don't feel like doing anything. Other than the bots trading, there may not be anyone else trading. I can guarantee you a hedge fund company that has active traders, they're not holding their meetings in the morning when we have volume, volatility, and momentum. They're having their meetings in the afternoon. So we don't trade. We look to exit. Here's another trending day. Okay, that was kind of an ugly one, the last one, right? That's not the best day to trade. Still 3 profitable trades. 4, actually, if you took the last one. Nice trending day on this one. So at 7 a.m., you'll see the 1 hour is what? 1 hour is bullish. We're only looking to go long all day until the bottom changes to red. We're only going to buy. Buy. All right. So at 7 a.m., we come in, we look at the chart. What do we see? You can see how long the 15-minute has been green. It was green back here, retraced for a while. That's why these are red. Remember, red, 15-minute red against the 1 hour green means retracing. 15-minute pulling back. Pulls back some, not much. And then gives signal to buy. Well, you come in at 7, you have to decide if you're going to take the trade right at 7 or not. If you would not have taken the trade right at 7, I have that you would have sat out all morning. You would have sat out pretty much and missed the whole day. Right? on this trade. You would have missed the whole thing. So you ask about getting in late. When there's signal like that, about the best thing you could do is use your other tools. Use our trend line, look at the highs and lows, and enter on a pullback. Wait for a pullback. So, I mean, you could have entered on any one of these pullbacks. You would have a trend line drawn. If you drew a trend line from this point to this point and extended it on up, right? It doesn't break till over here. So you just have to use the other tools that you're using, like support and resistance and our highs and lows. Wait for a high to break, and then wait for a pullback and get in. That's what you're going to have to do, or you're sitting out, missing the whole thing. Okay, so 15-minute turns red here for a while, and then we get a green signal because the 15-minute goes back to green. So notice that it gives you a signal and then it pulls up quickly after. So again, this is another one that's close to noon. Are you taking that trade? And again, decide that tonight or decide that tomorrow morning before you trade. All these decisions that you make, like, when to enter. And then if you're going to take the trade that comes between 12 and noon, because sometimes it comes right at noon and we haven't been taking that. You need to decide those ahead of time. Okay, even this one here goes up, pulls back up. It's a profitable trade depending on where you close it. Here's one thing I will tell you. If I'm closing trades at noon, I'm not placing trades right before noon. Just not. There's not enough. Look at how many candles that is. I mean, what is this? There's 1, 2, 3, 4. There's 5 of them. There's 15 minutes before noon. So this triggered 15 minutes before noon. I'm not taking that trade. Okay. If I'm closing at noon. So if you're one of the traders that selects closing your trades all out at noon to be done for the day, leave the market, go do what you want, stress-free for the rest of your day. That's what that gets you if you close at noon. It gets you all that, right? You can leave. You don't have to worry about managing your trade. You're done. You can forget about the market. You can actually leave the house and go do something. If that's what you do and close at noon, then I wouldn't take a trade right before noon. This is 15 minutes till. Now, if you want to take it half an hour, if you want to take between 11 and 11:30, it's up to you. That's a rule you have to make for yourself. All I can do is give you the different options. That's what I'm trying to do. But 15 minutes before noon, if I'm a noon trader or closer and I close at noon, there's no way I'm placing that trade 15 minutes before noon. I don't expect it to go anywhere. So why take it? That is a profitable trade overall if you close partial here or here. Okay. Now, if you move your stop to break even, whatever, you're going to get stopped out over in here somewhere, right? Automatically, you're going to get stopped out on all of it. Best exit would have been here, right? Because the 1 hour turns red here. And that's okay, exit. I'll take it. It's better than exiting back here, right? But the best exit price-wise of the 4 that you can select would have been end of day. Now, how in the world could you have got a trade here to end of day? The only way you would still be alive if you're not taking any trades afternoon, the only way your trade would still be on to close out here is if you entered back here, anywhere in here, and did not move your stop. That's it. So like you entered here, it started moving. You closed partial, and you just left your stop where it was. And you closed out at the end of the day. Or you entered in here somewhere. Went up, you closed partial, just pulled your stop to break even. Here, whatever. And you don't move your stop using the tool. That is the only way you would have been alive here. Your trade would still be on. Okay. So when I show you, yep, this is your best exit, you can't ignore what happened here. How do you stay out of that? This is part of looking at the market, seeing, well, how could I have been in that? How could I have been in that so where I would have got more out of my trade? Because this pulled back and took everybody out. Well, the only way would have been is if you entered anywhere down in here and pulled your stop to break even and left it. Okay. That's it. Because if not, you're taking out on this. Everybody's taking out on this, right? Here is another one that if you didn't take it right at 7, you missed out. Pretty much on the whole day, right? Why would we not take, and that's the thing. You're going to go ahead and just take it at 7. Look at what, except for that one, because the 15-minute had just turned opposite color. So right now, 1 hour's red, 15 minutes been red, nice bearish move, pull back, you're going to enter. Okay, you're going to sit through a little drawdown. Stop placement on this. As you look at this, you go back and you can either place it way up here and put on less contracts, which as you can see, it goes the distance, or you're going to pick little highs back in here. So like right here where it came down, kind of got flat for a minute, plateaued for a minute, gave you a little high in here, right, that wick. And if you look to the left, you'll see that's where that candle stopped. So above that level or above this wick, same thing. You see this where this candle wicked back. If you look to the left, that's where the red candle stopped, right? So you would place it above that price point. Give it some room. You would almost have got stopped out, but not quite close. So it pulls back a little bit, goes down. You're probably closing partial, pulls back, goes down. You're trailing your stop. 1 level or 2 levels back. If you're trailing your stop 1 level or 2 levels back, when it hits here and pulls back, you're probably taken out. Depends on how aggressive you are with your stop, right? Taken out. Get another sell signal here. It is between that 11 to noon. It looks like about 11:15, if I had to guess. About 11:15 there, signal. Again, if you're taking them, if you're closing at noon, you have to decide, are you getting in that trade or not? If you did get in that trade and you're closing at noon, guess what? Maybe a little loss in there, okay? Maybe a small loss. If you're closing when the 15-minute turns green, same, small loss. Maybe a little bit better. Depends on where you close down here. If you wait for the 1 hour to reverse, it never does. We stay red all day. That person's not getting out. So if someone's waiting on the 15-minute to turn green and then the 1 hour, they never hit that. The 1 hour never goes green. So you are still in till end of day. You're closing your trade with the other traders that close at end of day. Best position to get out on would have been the end of day close. So for the one that chooses to when the 15-minute and then the 1 hour turns green, if you get the 1 hour turn green, that person never got a signal, never closed, was forced to close at end of day with the people that close at end of day. Well, you made more money on those runners. So this one, again, I told you I'd show you the gold bad and ugly. And we know gold's been kind of choppy the last couple of weeks, right? So gold, you come in 7 a.m., you look, you're green on the bottom, you're green on the top. What are we doing? You have a nice bullish move up here. You're trading. You're getting in. That's what we said, right? That's what we did on the other charts. And we caught nice trends, didn't we? On those days, we got nice trends on the first trade, right? So we're going to do it again. We're going to come in, we're going to place a trade to go long. Again, we're not just, I didn't cherry pick trades that were trending all day. This was last week on gold. Okay. So this one's ugly for the first trade, right? Because the 15-minute is still red, been red or green, sorry, been green for a while. The 1 hour turned green here. We're like, okay, we're only going to look for long. 7 a.m. My rule is I'll take a trade. So I take the trade. Where's my stop? Go back to the previous low, or the previous low before that, or the previous low. I know most of you guys would not come back that far, right? If you're looking at highs and lows, that would have been the only way you would have stayed in for this. You would have sat through a huge pullback. Most people that I know just go one level back, which is here, and you're going to give it a little bit of room. So you were taken out about here. It's a loss. It's a full loss, right? Never goes in your favor. Well, goes up a hair, then comes back. So you're out here on this pullback. Pulls deeper, deeper. I'll show you another way that you would have not lost as much. Goes back green. And don't lose faith just because something like this happened. I just showed you like 4 or 5 charts where you've had very good profitable trades. So you cannot let this shake you. You get in with 10, you're closed out on a full loss. If you're not reverse or closing it out manually, you're closed out at full loss. Don't let that shake you, because that's the way your day started. Take your signals. That's it. Make the rules up and take your signals. Take your trades, because it pulls back here and then you get in on a buy. What did you just do? Well, you just sat through the retracement, and the second trade you got in at a better buy price, didn't you? So the 15-minute goes back green, buy signal, you're going to buy, and then you see what it went up. Draw your tool, move your stops, close your partial. Again, if you're trailing one stop back, you're stopped out in this. If you're trailing 2 stops back, I don't think you were stopped down on this one. Yeah, you would have been, because you'd have had a tighter stop on this. Because if you entered here, you'd go back to that low, put your stop. Or you can come back to this one, put your stop. Give it a little more room. So overall, profitable trade, and then the 15-minute goes red here. So how could we avoided the first loss? You couldn't. If you said to yourself, 7 a.m., wherever this thing says I'm at, I'm going to do it, you would have bought. How could you avoided that loss? You couldn't. There's no way. There's no way to avoid the cost or the loss. Now, if you put your stop below this low, you were stopped out here. Could we have avoided taking such a big loss? Yeah, but there's only one way. And if you're going to do this, you're going to do it on every trade, right? Right here, we're green. 15-minute, 1 hour green. We're going long. We take trade. Put our stop down below this low. We're looking to manage the trade. Right here, you get a 15-minute goes red. It's on one of these, probably it's that wick candle right there. That goes red. What does that mean? Retracement. Pullback. Could you have closed there? Yeah. If you would have closed when this went red, opposite direction, right? We got in on green. When you get in on the 15-minute green, the 1 hour green, what do you want to see? You want to see everything stay green. That's what you want to see to ride it out. Okay. The best entry's here. This turn green, this turn green. That would a good entry. And what do? If you enter there, you want to see everything stay green. You ride the trade. Everything's green, then this turns red. We know it's what? It's retracing. You could close your trade out and look for another entry to get long. We're going to get them, right? And that's back here. When this turns green again, you enter. And you want everything to stay green. Everything stays green. And then the 15-minute up in here does what? On this pullback, it turns red. So you would want to close out the trade. If that's your rule. Okay, I'm just showing you another option. And it wasn't on that one. Yeah, I think it was on that one. I think it was on this candle right here. Anyways, so, but if you're going to do that, see, as you look at that, you look at, oh, wow, that's great, right? Everybody's looking going, well, that's good. I got in long, right? Instead of letting it hit my stop, when this come up and said, okay, I'm pulling back, right? I'm retracing against the 1 hour. You would close out your trade. You're closing out less of a loss. Good trade management, yes. But if you do that, then that's what you do on every single trade, right? I'm looking here. So here, short, right here, it turns green. What are we doing? You would close out your short and look for another trade to get short in, right? You're trying to maximize your profit and minimize your loss by doing this, if that's what you do. You get in there again. Let's go back another. You get in here and you're long. Up here, this turns red. What do? You would close out your runners. You'd look for another position to go long. That's that one. If you're closing at noon, you don't take it. I don't know who anyone would take it, but if you did, you're closing out one of these other opportunities. This trade, same thing. Again, you get in here. Now, if you're managing with a tight stop loss, you normally don't have to do this, right? So you get in on this one, opposite signal, you would close. But if you're trailing with the stop loss and using position tool, you're probably out here at a better price, okay? Is this the one we were on? Yeah. So second trade. So the first trade is going to be a loss no matter what. Okay. Was your loss larger, getting stopped here, or was it smaller because you closed out when the 15-minute turns red? You have to decide if you want to take that. If you're getting in long on the 15-minute, 1 hour turning green, then when the 15-minute turns red, if you're closing it and saying, okay, that's my pullback signal, it's retracing, I want to try and maximize my profit, or in this case, minimize my risk, your loss, you'd have had less of a loss than the person here. Another entry to buy, good trade. Entry to short, good trade. Entry short again. So we had a pullback. We got green here. So it 15-minute turns green. It's doing what? It's pulling back. Well, it did pull back. Then what? Get a signal, go short. That's a great trade. Great signal. We had a retracement back. And if you drew a trend line across this level, if you had your chart opened up a little bit more, you could have drawn a trend line across that. Trend line break, trend line test, short. Everything's short. You're going to sell. You're going to close partial, probably ever stop to break even and get stopped out. Most people are not going to make it to end of day or even the 1 hour switching because you're closing on the pullback, depending on how you ride your trail. Okay, so here's what I'm going to do this week. It's going to be a little different. Again, we're still in testing phase on this. I appreciate all the feedback on what happened the last 2 weeks. It was a little just the trade signals. And but this has been the direction I've been wanting to take this, is to where you guys can see this on the chart, right? Visually. It's not ready for me to put out there that you guys can put it on your charting. Part of the reason why is I just changed this one, the one that puts the arrows on top and bottom. Okay. So I've got some cleanup to do on that, a few things to get ready. So my target is still the end of the year, so you guys can all go into 2025 with something new and something that works. But what I felt was I needed this 15-minute was down here on the bottom. It just looked just like this one. And I just felt people would get confused on that. I mean, I knew how it worked because I'm the one that, put it together. And this is something we used before on MetaTrader 4. So, but I wanted something a little cleaner, something a little easier to understand for you guys. Something easy to use, something that would not get someone totally confused. So what I'm going to do is this week during our trading session, during that 7 to noon, I'm going to have charts up, and it'll be on the YouTube live. So it'll be in a private live though, but they'll be visible for the guys that are in premium to actually use it. It'll be on my charts, and it'll just be actively streaming during our trade session. Okay. So that you guys can get in there at 7 and look and see what's happened and where it's at, so that you guys can, check every couple minutes. Basically, with this setup, we're doing what? We're waiting every 3 minutes. That's it. So when a candle, you take a buy here, 3 minutes later, you're looking. Okay, is this still green on the bottom? Yep. All right, let me go get another coffee. Come back 3 minutes. Is this still green on the bottom? Yep. Is it pulled up enough where I can, has it hit the 1-to-1 risk ratio where I can move stop to break or halfway to break even? Yep. Okay, I'll do that. Now I'm going to go get another coffee. That's if you can drink the first one in 3 minutes. 3 minute candle comes up and closes. Do you get another, or is it still green here? Yep. We're holding the trade. All you have to decide is every 3 minutes when you're looking, is it still green on the bottom? Yeah, I'm staying in that long, holding my position. Has it moved to a profit target? Yes. Okay. I'm going to move my stop along with it. That's it. Not much else to do. Wait it out. Get a reverse signal. What are we doing? If you're not already out of your long, you're going to close your long. You're going to enter short. And now you're looking for the red or the top to stay red. Just sell. Yep, it's holding. 15 minutes holding short. 1 hour's holding short. Move your stops along the take profit tool along with closing partial. Sorry, guys. Thanks for that. All right. So, again, on the live streaming signal this week, I'm going to have these running on my charts on 4 of them this week. It's going to be in a private live on YouTube for the premium members. Going to have it running on 4 different instruments. We're going to do gold, Bitcoin, platinum, and S&P. All right. Those 4 we're going to run. I don't want to run it on anymore because the charts are going to get small. I think you guys will be able to see the 4 charts. You're going to see it. It gives you enough room where you can see the signal. You can trade whatever you want. You can stick with just gold, or you can trade all. You guys know that I normally take trades on 3 or 4 or 6 different items. I don't recommend doing that unless you've been trading for a long time. I would recommend looking at a couple different things. As we traded the last 2 weeks, gold was really choppy on most days, okay, without trending. S&P, ES, NASDAQ, Russell, and Dow, those had nice trending days, okay? So I like to trade multiple instruments for that very reason, okay? Because one of them or a couple will break out and run, and they'll have a nice trending day. Last week, I remember one day where gold was so choppy, but I was in Bitcoin and I was in NASDAQ. and they were trending. Okay. So that is something that you can adapt your trading to. Now, most people focus on one item, one instrument. I think that's good. Get to know the instrument. As soon as you can, get to know two instruments, because it's like having a backup instrument, right? So last week, I look at those four right there as all I traded last week. I did get into some oil late in the week, and NASDAQ was the other. So for me, I have 6 charts open. I get into gold. I get into Bitcoin, get into NASDAQ. I think I was also in platinum on and off, little trades here and there. So then I got up to like 5 and 6. Well, NASDAQ took off and trended. Bitcoin took off and trended. So since they're trending, do I have to fight with gold the rest of the day? No. I could stop trading gold. The morning I got in, it was chop. Had some decent trades, some nice losses. No huge losses, but I had some. I think I had 2 half losses and a full loss. So basically 2 full losses. But Bitcoin and NASDAQ made up for those. And then I got into a gold one that was good, that actually covered all that and a little profit. But I could have stopped trading gold because Bitcoin and NASDAQ started trending. So did I need to mess with gold at that point? No. You got a couple things that are trending. Remember, let your winners run, close your losers, manage your losers, right? So you can trade all these if you want. They're all up and running. So someone asked, John, about how the indicator signals compare to the manual entries. It's about the same. I don't want to say it's better right now, but it's getting closer to being better. A lot of these, let me go back here. A lot of these signals, John, are like this right here. And I've mentioned that, and I didn't mention it today. I don't know why. I mentioned it that when you get a signal, so this past few weeks, I had mentioned in the 2 videos I did, I don't know, a couple of weeks ago, it was a Sunday and Monday, was when you get a signal, look to the left, and was there a pullback or a trend? So here we had a signal to buy. 1 hour's green, 15-minute goes green, a signal to buy. Look to the left. Was there a downward move? Yes, there was. Can you see yourself drawing a trend line on that? And I don't have drawing tools on here. So can you see yourself drawing a trend line on that downward move? Did it just break the trend line? You know, my rules on a pullback, right? We're getting a pullback. My manual rules. We're in an upswing. All right, 15 minutes say is or 1 hour's green, 15 minutes green, we're going to buy. We're riding that. We would draw a trend line up that move. It breaks the trend line, right? Which is here. Well, what happened when it broke trend line? Breaks trend line, you get a signal on the 15 minutes saying we're reversing. That's how I've tried to build this out, to where it's signaling the way I would manually trade, how I would manually draw trend lines on the charts, wait for a trend line to break or test, and know that it's going the opposite direction. And you're going to notice as you look at these and draw these that, yes, it's in here. So that's why I said it's almost there to where it's exactly the same. So again, you're green, you're trading long, and then it comes up and says right here on this first signal says, okay, it's retracing because the 1 hour is still green. Well, if you look down, that's around the trend line break. It's actually been signaling a little bit earlier on some, which is great. I'd rather close out my long here or here if that's what I'm doing. But we know it's retracing. right? So can you look to the left when you get this opposite signal? Yeah, we were already trading the trend line, right? And then when it comes over here and says signal long, well, if you were using trend lines, you would already have a trend line drawn from like this high to this high, right? That wick right there to that wick, extend it out. Where does it go? It goes across that wick and on down. It's down right across the move here. So I've tried to have it signal on those trend line breaks as well. Well, we did. We got a break of that retracement line, test of it, and boom, it went. Okay. So same over here. This one still did, but this was around, I think there was news. It's around 10 o'clock. So I think there was news and there was stock market open at 9:30. So you had all that come into play here. Still a good trade though, right? If you look to the left, if we would widen the charts out, you could have drawn a trend line up the screen move. This is a little cleaner to see because there's more candles. So the same way, right? Get a signal to sell, right? So we're going down. We get the 15-minute turns green. What are we doing? It's retracing. It's pulling back. Okay, let's draw a trend line. And you could draw trend lines. We're going to draw a trend line because we get a signal it's pulling back. Overall, we want to sell. Widen your chart out so this isn't as steep. Draw a trend line across these candles. It's going to extend out. Get a signal short. When's that signal coming to short? After a trend line break. Right after a trend line break, right? So that's manually versus manually. I love this. And the reason, we used to have this set up on Forex a long time ago, and it wasn't even this clean. I mean, it was clean, it worked, but it wasn't the best, right? But I'm trying to, you guys most all know my son trades. He's trying to trade, right? And he's doing good. I'm setting him up with this tomorrow, provided he can unlock his computer and leave it unlocked for me. So after we get done trading here in the morning, I'm going to set him up with this as well and let him trade. And it's just I'm going to let him do 2 instruments instead of 1. He's just been trading gold only. So I'm going to let him do 2 instruments. But I'm trying to make it. Oh, that's right. He was supposed to be in here. Yeah, I forgot to wake him up. He was supposed to be in here watching this, so I'm going to have to send him the replay link. But anyways, so yeah, it's basically it is set up the same way I trade. I was trying to program everything manually, so I don't have to do that. We don't have to draw the trend lines. We can still. I still will. But do we have to? No. So that's one less thing to do. So I love it because it's giving me that signal on the trend line break. Normally I would have an alarm on a trend line break, right? We would draw a trend line, put an alarm on it. Well, now we don't have to do that. We don't have to draw it. We still can draw our trend line or retracement line, put an alarm on it. So anyways, these 4 will be running. And yeah, I'll still do the alerts on the gold. I don't know if I'll have them on all 4 because since I've changed that 15-minute indicator over, I basically had to redo it, a lot of it. And I don't know. I don't know if I want to do all 4 and have them signal. So it'll be up there to watch, and gold will still go out through there unless you guys want me to switch that over. Everybody kind of decided S&P, so I may do that. I may switch over to S&P signals, which is the ES, instead of gold this week. And eventually it'll be an all package where you guys can, download it. But that's what it will look like on my charts. They're already set up and running on my other screen. And these will not I'll probably draw lines on them at 7 a.m. versus putting the session tool on them. For those in premium, let me know how you like how that looks right there, because that's what you're going to be seeing versus having the session tool on there, because the session tool kind of clutters up things, I think. And just let me know. You can let me know in the Discord. But that's how it's going to be running. So again, like here, we would, and if you look, I guess you can see where my mouse is. We have a 1 hour turn green, 15 minutes already green. So when the 1 hour turns, the 15 minutes should already be that color, right? Look down here on platinum, right? So the 15-minute turns green, and then the 1 hour. It should be that way. That's what you want to see. Ideally, you want to see the 15. It's either that or sometimes they turn at the exact same time. Okay. Ideally, I like to see the 15-minute turn first. Why? Over here, we're in a sell. 15-minute means retracement, right? But the retracement leads into the trend change, the direction change, the 1 hour turn. We're going to take it long. Okay. If you look at a trend line, where would the trend line be? Well, if I was trading it, I'd have a trend line drawn from like here or here or here, extend that out. If you can see a trend line from this point to this point extended down, right? We got a signal on this green candle. So again, trend line from this point to this point on down, right? It would be at the tail right here. You can kind of see that across there. I wish I could draw it. It hit about that tail. Well, what is that? Well, if our trend line comes down through here, it's a break of the trend line, pull back to test the trend line, backside of it, and this low as support, a green candle entry, go long. Well, how much is that of a setup for us? Okay. It's a good setup. We're still not going to take it long yet because of the 1 hour being green. So we need further confirmation. Well, the 1 hour turns red. Boom, you're in over here. Right? Still a good entry. But all the other stuff plays out. You just don't have to do it as much. We're not looking. Okay. Same over here. 15-minute turns green. It's pulling back. And then the 1 hour follows. You're entering long. Yeah, I will. Yeah, I'm going to mark the day with the 7 a.m. and I'll mark noon. So I will do that. Yeah, I think it's cleaner. So I'll leave it like that just because I think that's a good clean chart. These will not be marked up. I think on my charts where I'm trading, the other, because this is a separate window, is basically what's running. Okay, so I think I'll have to verify that. But when I draw on my charting, and I'll have to practice that here in a little bit, I don't think it draws on these charts. I think they're totally separate. But I got to verify that because I don't want to junk the charts up for you guys. If that's the case, I just won't draw on mine as I'm trading. But yeah, they'll be running tomorrow. I'm probably going to do a little, I already did one test run last night on YouTube. So I don't know much about that, the streaming. If I can leave that open and just stream nonstop like that, we're going to try it. Let me shut this down. All right, so that's it for the trading. Again, still use your trade management tool. You guys have decisions to make. Everybody has decisions to make to help put their plan together. And you just have to decide on, what you want to do. When do you want to close? Do you want to just close everything at noon? Close all trades at noon and be done. Is that right for you? Okay. It's not right for me every day, but can it be right for me some days? Sure can. If I'm trading and I've had a great morning or miserable morning, and I just want to be done at noon, can I not close them all out at noon? Yeah, because that is one of my exit strategies. That's one of the 4, right? I can close them all out at noon. Can I, if I want to sit here and manage my trades a little bit more for a little extra profit, can I close when the 15-minute turns the opposite color? Yeah, I can. I'm going to be closing one here, one there, and maybe one goes to the end of the day. Can I close when the 1 hour turns? Yeah, I can. But what does that mean? Well, afternoon, it means, and this is for you traders that do select this. If you select to get out of your trades when the 1 hour turns, what does that mean for you? So it's noon. You're going to go take lunch. When do you have to look at the computer? You've got your stop adjusted that you can get stopped out. Hopefully you pulled partial already, or you've adjusted to that 1 or 2 or 3 level risk reward ratio. You're only going to have to look at 1 o'clock. So you're free for an hour. So is that one of your plan to do that? Can you change that exit strategy? 100% you can change your exit strategy. Tomorrow, if I've got to, let's say my daughter has an appointment and I've got to take her to the orthodontist, then I'm going to be taking her at 2 o'clock. Well, what does that mean for me? Well, I may want to close them all out at noon, so I don't have to check my trades on my phone, right? Just boom, noon. Tomorrow, I will close at noon because I have this and this and this and this going on in the afternoon. If I have projects I want to do, could be on the computer or on the house. You guys know we had family coming in. So I had to get stuff done around the house, like some painting, door locks, change out some new light fixtures, right? Well, that takes time. I didn't have my phone logged in, looking at it all the time. So what strategy would work for me there? Waiting on the 1 hour to turn. I could noon, have lunch, go work on a project at 1 o'clock, come back to the computer, look at the trades. Has anything changed? Nope. No signals to get out on the 1 hour. They're all still the same color. I go back and do another project for what? For an hour. Come back and look again. So I have hour spurts that I could check on the market and see if the 1 hour has turned, right? So it's okay to change that if you have reason to. I think it's fine. Can you just say, okay, I'm just going to close out in today. I have 6 trades on. My stop's adjusted. I've already pulled partial on all of them, locking in profit. My stop's adjusted where I want them. I'm just going to sit and close them out at the end of the day, or they're already closed out on pullbacks. I'm not even going to look. I'm going to look at 445. Wherever they're at, I'm closing them. Right? Well, if that's my exit strategy, then that's what I'm going to stick to on that day or every day. So that's typically going to be my strategy. We're going to adjust stops, and then I'll peek in here and there. You don't have to stare at the charts in the afternoon. Sorry, I'm still fighting this cold. All right, so I hope you enjoyed this. This is how the indicator works. It will be live up and streaming in the private live, and then I think everybody's posting recaps. Keep in mind on the recaps, everybody's trading different. So as you've seen in the charts here, not everybody will close at noon. Not everybody will close at a 15-minute change in direction, afternoon. Not everybody will close out at a 1 hour change. Everybody won't close out at end today. Everybody's going to pick what works for them. What works for them for the day. Some of them may have plans in the afternoon or have to head to work, might close a trade. Management of the trade, same. You're going to pick a swing low. You might have to go back a low. And I think everybody's closing partial, and I think most people are moving their stop to halfway when it gets to the 1-to-1 ratio. I like using the tool for that. And by moving your stop halfway to break even, you're lowering your risk, your open risk, right? So everybody's going to be a little different on how they trade that. It's not one that's right for everybody. That's why I give you these options, because everybody trades a little bit differently on their trade management, and that's based on their risk tolerance. Okay. So I hope you enjoyed. Hope everybody has a great week this week trading. Don't forget, if you are trading for a living, then you should be locking in profits every day. So if the market gives you profits, lock in profits. Doesn't have to be all. Lock in some. Lock in enough that you make a paycheck at the end of the month. Because after all, if this is your job, if this is your career, then you need to be locking in profits, or else why are you sitting here all day, right? And there's a difference between, being a day trader, locking in profits, and having losses. You're going to have losses, especially while you're learning. I still have losses, but one of the things you can do is by moving your stop halfway, minimizes your loss. The other is by closing partial. When you close partial, you only have, let's say you put on 10 contracts and you have a stop loss set and you can move it to halfway. You just minimize your risk. Your loss is lower. And then also when it gets to 2-to-1 level, if you close out partial, close out 8 of those 10, what'd you just do? Well, then you lowered your risk again. You only have 2 contracts on, and you've moved your stop to break even. Risk-free trade. You got 2 runners on, risk-free, right? So that should help some of you guys. Using that tool should help some of you guys to actually feel a little more relaxed in the rest of your day in your trading. Once you can get and move your stop to halfway, again, you're only going to lose half the money that you put up. And then by closing partial, you should relax a little bit more, right? So you're getting more relaxed. First, you're getting a little more relaxed because you move your stop to halfway to break even, half the risk. Then once it moves to 2-to-1, you're closing partial. Now you've got money locked in for the day. You should relax a little more, right? Yes, you're going to, and if you move your stop to break even, you're not going to lose anything. Even if you leave your stop on the 2 runners at halfway, it's going to be a small loss against your game, but you're giving it a little extra room to breathe, right? So a little more relaxed. Then when it moves to hit profit target 3, you're moving your stop beyond break even or to break even or that first level. Even more reason to relax, right? So when you take the trade, I know there's going to be some anxiety and, you got X amount of risk and is it going to go my way? Well, that's what the trade management tool is supposed to help you do. Okay. Basically, it's just a way to decide when to move your stop and when to pull partial. And it should force you to do that. So just do that on every trade. And you'll notice that, yes, you might have a little bit of anxiety when you first place the trade. Heart might be pounding. You might feel sick to your stomach a little bit, especially if it's real money, it's large. But once you can do those things, you'll start to see that, okay, now I have less risk. Okay, now I'm at break even. I can't lose anything. And I've closed partial. I've locked in my 200 or 300 for the day. Okay, so anyways, hope you guys enjoyed. I'll have the streams running tomorrow. I don't know about tonight. I might try and have them running tonight just to see how they hold up. It'll be during the Asian session, maybe about 8 o'clock. I don't know. I might have them open at market open. I don't know. We'll see. So anyways, hope you guys enjoyed, and I will see you in Discord. Everybody have a good week trading. Good luck. Stick to your rules. Stick to your plan. I'll talk to you later.